Why are central banks around the world continuing to buy gold in record amounts and dumping U.S. treasuries? Are central banks sensing weakness in the dollar and counterparty risk by holding it in reserve? And should we, ordinary Americans, be paying attention? With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. And is this steady erosion of your purchasing power putting your retirement at risk? If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. The U.S. Federal Reserve's approach to increase the money supply and monetize the ever-growing national debt will in turn weaken the dollars being held by foreign national banks around the world. Given this fact, countries with sizable dollar reserves are increasingly converting their reserves into tangible assets such as gold. Nations like India, Russia, China, and Brazil are leading this trend by buying gold at an unprecedented pace, disrupting the balance of power between the East and the West. In years 2022 and 2023, central banks around the world have purchased more gold than any time in recorded history, according to the World Gold Council. In 2022 alone, central banks collectively increased their purchases by 152% to more than 1,100 tons. This was an all-time historic high. The council also expects this strong buying demand to continue into 2024. This mass increase in gold holdings and exodus from the US dollar as a central bank asset is not just isolated to the emerging and expanding BRICS nations. Polish and Dutch central banks within the Western nations are increasing their gold purchases as well. In 2023, the Polish central bank stated that they want to double their gold reserves to up to 600 tons. By amassing gold, these institutions are tactically positioning themselves to counteract potential losses that they perceive with the dollar in the medium and long term. If the smart money is buying gold for what they perceive as growing weakness in the US dollar, it only makes sense that the ordinary citizen prepare as well. This trend isn't just about hedging against inflation or economic instability. It's a calculated move to diversify reserves and reduce reliance on the dollar. Central banks are essentially returning back to the historic money status of gold, both as a form of diversification, a hedge against potential crises, and its scarcity of supply. Stated simply, central banks can't print more gold. The trend is clear. Central banks are no longer selling gold, they're buying it. They're reducing the supply on the markets, effectively driving up the demand and the price of gold. As the collective acquisition of gold increases and the reserve holdings of US dollars decrease among these central banks, this will gradually create increased inflation of the US dollar, as the existing supply will be exported from foreign nations back to the United States. Other international currencies don't offer a compelling alternative, as they are based on unconvertible fiat paper. The lack of a strong alternative accelerates this process of de-dollarization, leading to increased demand of gold and thereby weakening the dollar's position as the global reserve currency. Gold is the only true global currency that is accepted due to its time-tested trust and store of value. No other form of money has this legacy and has withstood thousands of years of countless economic cycles. Fortunately, this move away from the dollar will be gradual, which buys time for the ordinary investor. Simply put, buy low, not FOMO. There's been much talk and no shortage of hype and theories about this particular subject, de-dollarization, with regards to its timing and velocity. Regardless of the differing opinions of many of the macroeconomic experts in terms of its forecasting and time horizon, the process has begun and it is accelerating. The BRICS nations, Brazil, Russia, India, China, and South Africa, as members, have already been trading commodities such as oil in their own currencies, not the dollar. The introduction of the membership of Saudi Arabia further threatens the US dollar's global reserve status and its dominance as the petrodollar. Furthermore, the original BRICS coalition alone share a global GDP that is now overtaking the previously dominated Western G7 nations. With the 2024 entry of the additional 6 nations, Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates, this will increasingly lead to a more bifurcated global economy and trading system, further isolating the dollar as a central bank reserve. Building on the trend of de-dollarization, central banks around the globe are stepping up their gold holdings. This shift is largely a response to the diminishing purchasing power of their dollar reserves and what can be termed as a response to the weaponization of the US dollar. Irrespective of one's feelings and views of Russia's invasion of Ukraine in the spring of 2022, the resulting economic sanctions, seizure of foreign assets, freezing of Russia's currency reserves, and the punitive restrictions placed on Russia with the use of the SWIFT banking system created an atmosphere of uncertainty among Eastern Bloc nations. Moreover, this collective action by the G7 nations, more specifically the United States, has caused many foreign governments to further contemplate their participation in the dollar system and has created an impetus for these non-G7 nations to further distance themselves from the dollar reserve system. As with the case of the Russian invasion and resulting sanctions, the prospect of being considered and dealt with as a pariah state in the eyes of the Western nations has the potential to transform any country's dollar reserves from a highly liquid asset to essentially useless pieces of paper. Hence, we see the continued accumulation of gold and the reduction of dollars and dollar derivatives of these foreign central banks. Gold is a time-tested and universal form of money that every country trusts. It cannot be inflated or be confiscated if held domestically within the country's central bank. This provides security. Therefore, the mass purchases of gold are likely to continue throughout 2024, further pushing up the price of gold. Gold is a Tier 1 asset that has no counterparty risk, is no one's liability, and has only increased in value. Gold IRAs provide a tax-deferred means of building wealth, storing it securely, as well as protecting your retirement and purchasing power from counterparty risk. If you're ready to get started on your gold investing journey, see the links to the free guides in the video description. Thank you for watching.